Hey everybody, today is Wednesday, the 10th of April. This is Brian from Alphatrends.net. Today we saw the market gap lower after the CPI report. And, everyone talks about the PCE being the Fed's favorite inflation gauge, but the market doesn't really ever care about it. The market cares about the CPI and the PPI, and it only matters when it matters to the market. And today it clearly mattered. We had all week a declining 5-day moving average, so we were highly suspect of this market already. I was saying that we needed to get back above here to become a little bit more neutral. And over to the daily time frame, we're still holding on the anchor from this mid-February pullback that we've been observing, and now we are just in this range here for the S&P 500. So really not a lot of damage has been done, but we are still battling with that 20-day moving average, which we're currently below, and we're still below the declining 5-day moving average, as well as the anchor from last week's low and the blue month-to-date anchor. So overall, you just still have to have a strong defense here. We're going to talk about Bitcoin and Ethereum in a little bit as well, so stay tuned for that if you're interested in those markets. NASDAQ still in this bigger range that we've seen over the last 6 weeks, 433 up to 450 basically. Although now we're back down to the second test of the 50-day moving average. And I'd really like to see this market break down, as I've been saying, and go down to the year-to-date anchor. And I should point that out on the S&P 500 as well, is if we continue with weakness, it seems highly likely that we are going to get a test of the 50-day moving average. So I'm in no hurry to buy dips while we're below a declining 5-day moving average in all of these markets. And I've been saying I want to see the year-to-date anchor tested. We tested it today in the Russell 2000, and this market just continues to be a great market to avoid. It's just too choppy. There's really no advantage to being involved in this. We broke the trend line from earlier in this year as well, and we're right down to the year-to-date anchor. Maybe we find buyers there, maybe we don't. To me, it really doesn't matter. I mean, it's a reference point, but it's not an action point. Certainly when you have a declining 5-day moving average, there's nothing to do there. And just based on the overall volatility and choppiness of the Russell 2000, I have zero interest in it. The semiconductors, as we know, are the clear leaders. They continue to hold up better than the rest of the market as well. Today they were down just a little bit, but and still holding above that anchor from mid-February, as well as this recent band of support. I still want to see a breakdown. I'd love to see it break down below here. And the odds in the intermediate term favor that we're going to break down because we keep seeing lower highs with this declining 5-day moving average. If we were to get it back above 225, then we would become more neutral. But right now, I think high defense, and I'd love to see it break down and continue towards that 50-day moving average. It seems highly likely that if it were to break down and test that 50-day moving average, it would go undercut this low as well. So don't be in a hurry to buy the dip here. Wait for things to settle out and then possibly buy them on strength afterwards. But right now, you've got to be playing a strong defense. The biotechs continue to be garbage, basically, stuck below declining 20. And, that 50-day will be moving lower here soon as well because we're getting rid of this day in the 50-day moving average calculation. I'd still like to see it come down and test the October anchor. That would bring it down towards that 86 level. I think it's pretty, the odds favor it, basically. We're right here right now at the 38.2% retracement of the low from October up to this year's high. So maybe we try to stabilize in here, but stabilization doesn't mean you're going to make money. It just means you're going to get frustrated in a range. So wait for strength. And really, again, just back up above 93 is what makes it a little bit more neutral intermediate term, but not bullish. Financial stocks finally giving in a little bit here. We've been, I've been talking about raise your stops, raise your stops, raise your stops if you're involved in here. We are looking like a highly likely test of that 50-day moving average. You've got to remember, too, that 50-day moving average is rising from 40.31 to 40.37 to today 41.41. So it's rising about 5 cents a day. So, by the end of the week, it'll be 10 cents higher at 40.50. And that would mean it would only have to drop another 38 cents to get to that 50-day moving average. Overall, the primary uptrend is higher, but this is looking, you could even say, if you like these patterns, this is a shoulder, this is a head, and this is a shoulder. And if that's the case, then you would measure the height of this, 42.25 to 41.25. Which is $1. You take $1 from the breakdown point and subtract it, and that will give you a price objective down at $48.25. 40.25 would get you in that same general area. So just be careful in the intermediate term on the financial stocks. Energy names continue to hold up the best. And the trend is your friend there. This is our month-to-date anchor. You can see was tested today. Let's take a look at Bitcoin. On Twitter this morning, I had said that, let's go to Bitcoin first. I said that we ran the risk that this is a failed breakout over here that occurred the last couple of days, and I had sold the majority of my recent purchases. Now, remember, my recent purchases were down over in here from over the weekend, and I may purchase some of that back. Actually, you got to remember that my time frame is probably shorter than what yours is. I don't trust these things. I'm a trader. I got out of the majority of my Ethereum because I had purchased it back over in here, as mentioned over the weekend, and I don't like to let my winners turn to losers. Now, I sold it under here. It's possible I got shooken out of that, and that's fine. I can always get back involved. And I'm looking at 35.50. Maybe I'll get back involved above that, but I'd really prefer not to do it today. I'd like the market to kind of hang out here a little bit and tell me what it wants to do. Market doesn't care what I want, but I'm just telling you how I'm approaching this. I have some Ethereum left, but I sold most of it. So do with that whatever you want.